Do you want to make $10,000 today? Do you want to lose 20 pounds in the next month? Do you want to be well-liked and respected by all your peers? We can't help you with that. You've come to the wrong place. But if you do want to earn an hour of CPE credit for listening to this episode, right after you finish, head on over to the Earmark app, take a short 5-question quiz, and you earn 1 hour of CPE just for listening to us. Happy quizzing!
Welcome to UnAccountable, the world's okayest accounting game show podcast for product news, updates, and education. I am your ALPOG, Tyler Otto, and I'm joined by the TC PhD, Jeremy Van Grohl, who, again, you write these intros. Does anyone know what you're talking about here?
I mean, typically, I don't even know what I'm talking about, but I figured some acronym soup might be good to start out with today.
Yeah.
Because I think go.
I can figure out as much because you called me the ALPOG, and you're alluding to the Association of Lodging Professionals, the conference I just got back from. So apparently I'm its original gangster. But what is the TC? You're the PhD of TC? What is this?
You just call me doctor. I am actually speaking at a conference next week, True Charity in Alabama. So okay. I thought it'd be a good, we are now in the throes of conference season, right? Everything is ramping up. So how did it go last week? And I think you presented as well, right?
Yeah, so it's funny, man. You get to these conferences, and this one, it was good. Honestly, it was lower quantity than I wanted, but good quality came out of it.
Okay.
Well, I'd say overall as well, it's always funny at conferences, if you can get a speaking spot, and it takes years to build that trust to get on the speaker list, it seems.
Yeah.
But, no one was visiting our booth. And then I get up and talk, and now we got a line of people on day 2 lining up to come talk to us at our booth after. Man, Speaking at a conference makes all the difference.
What was the topic?
Your battle-ready tax plan.
Ooh.
Yeah.
I like it. How many people were asleep at the end?
All of them. But I threw in as many Spice Girls references as I could, and I invited a few people when I went through basic tax plans. I'm like, all right, this is the 3-minute Candy Crush break. Those of you that already know this stuff, go play. I'll call you back in a second. So I just, you got to mock your material some point.
Yeah. Oh, 100%. Cool. I think you said you had a story as well that you haven't told me yet. Do you want to divulge here? I think you have to now if I call you out.
I mean, okay. So yeah, in our group chat with friends, I told you I'd tell you this. What podcast? Why not?
Yeah.
No. So this conference, they had a live auction and a silent auction for vendors and everyone. And for those of you who don't know, I'm in the hotel industry, hospitality, and people are auctioning off. Some consultants are auctioning off hey, we'll do such and such workups for your study, and everything that's auctioned off goes to charity, right? The dollars brought in. So there's a silent auction, and one of the things we gave away was one of our tax plans. We'll walk through this. And when the auctioneer is going through, he's touting some people with these multiple night stays at these gorgeous properties they're auctioning off, and, a consultant that will come to your property. And then he gets to the accountants and he goes, look, I know it's accounting and it's not the most appealing, but here's what we're going to. And it's dude, I invested time and money to give away for free for your cause, and you kick off my product by saying, hey, it's not the most exciting, but and it's dude, I get it. Accountants can be the joke of it, but not when I've given you time or money for free to auction off. So I was a little bit salty. Then again, there are other people that brought stuff to auction off that nobody bid on. Dude, people bid on mine. There was a bidding war going back and forth. It all worked out fine, but I was just a little bit miffed that that's how they would tease up my services.
Yeah, I feel like that's bad DJ or host protocol there to not try to build up everything. So yeah, I mean, if you got bids, that's good.
What are you going to be speaking on though?
Restricted fund tracking simplified when you need it most, something like that. Yeah, so just tracking restricted funds and hopefully get a good crowd. How many people were there for yours? Just curiosity.
It's hard, man. I honestly think there were more vendors than attendees, though. It's probably 200 something attendees. But again, almost every one of them own a small inn, B&B, 6 rooms, 10 rooms, 15 rooms. So, decent enough. Hotel adjacent.
Yeah, love it.
But Jeremy, plenty happened in the news this week. And I don't know if you saw, but there was an article from the Washington Post talking about what percentage they have seen decreased in tax returns filed year to date compared to last year. Was it 1%, 2%, 3%, 4%?
I'll go with 3.
Sorry, sir. It was 2%, 1.7 if we're rounding, but they're already seeing a 1.7% decrease. And the discussion here is all the cuts at the IRS. This tax representative is arguing that we're going to have a $500 billion decrease in revenue voluntarily collected this year due to the reduction in administration. Now, whether or not that's true, that's someone's calculation. That is not gospel. But what is true is a 1.7% decrease in returns filed so far compared to prior year. Do you buy that, there's going to be a $500 billion drop?
I mean, where could we spend that money, right? I don't know. It's tough. Well, I think I saw a similar article with this, and I focused in on what percent weren't processed yet. And so I think it was like 70 million were out there already, and they only, of those 70 million, hadn't processed 700,000 of them, or just 1%, which I thought was like, that's pretty good, right?
Yeah.
So I don't know. Is it like, is missing out because it's not getting the diligence and the follow-up and the auditing process of this, or just because there's that many less people filing because they're not worried about it? I don't know. I'd have to think about the why behind that one.
Yeah, I don't know. I don't know if it'll be that much, because also, like, there are things we can do to improve efficiency. But I mean, cutting a collection workforce is definitely never going to increase the amount of revenue voluntarily submitted. So there's actually, I wanted to bring up one other article because I've seen several other people post it, but the article has been taken down. So Credit Karma posted a report, and you can still search for this report and it will show you the URL and a snippet of it. But if you go to their website, it says this article no longer exists, which makes me wonder why it's been taken down. They touted that they interviewed using Qualtrics. They interviewed over 1,000 of their users, and 17% say they are inclined. 17% of Credit Karma users that responded are inclined not to file their tax return this year because of the reduction in perceived audit capabilities of the IRS. But Credit Karma has taken this article down. So now it's like, why? Did they not vet the data well enough, or?
Yeah, but I feel like the simple tracking of whether or not you filed something like that, I feel like is super easy, and a checkbox that the IRS isn't going to miss, versus if you filled it out correctly, or if it was like reasonable even, right? But I feel like just the receipt of it is something that they can still track pretty well. So that is a little spicy.
Yeah. Also in the news, I don't know if you saw this one, but the IRS Criminal Investigation Department is working apparently with the banking industry more to increase reporting on suspected tax fraud transactions. So in the wake of the IRS cutting all the staff, they're also getting programs in place where it's going to be much easier for them to get information voluntarily from banks of things that look suspicious. So corporate, especially, audits could go up, and they might be better at finding the actual fraud, even if they have reduced audit capabilities.
Okay. I mean, is it under 10 grand, or like a transaction over 5,000 or over 10,000, you have to report it to, is it the like the Treasury Department or IRS or something? So
yeah, that's a great question you should ask. Let me go to ChatGPT and make sure so I just don't quote. So yeah, it's like I think it's 10 grand, but again,
10 grand too.
Don't quote us, folks.
But I think they also have got like controls in place that if you see multiple like $9,500 transactions go through, that red flags too. So yeah, interesting. And then with their criminal investigation unit, they're going to focus on corporate, not personal, which I feel like there is potentially more to bring in there than personal, but I don't know about that either.
I mean, it's a great question. The Accounting Today article only goes so deep, but I did find it interesting that like they're finding ways to potentially get more efficient, which I don't know. I don't view this necessarily as anything bad, because like that's the job of the IRS, is to find tax fraud.
I feel like the IRS equivalent of more efficient is like a faster fax machine or something.
Yeah. Instead of you no longer have the modem dial up every time an employee logs into their computer, right?
Yeah, you're on the phone with the IRS agent and you hear the little old beep noise.
Yeah, they have to log off their computer to make a phone call because they need the phone line.
Like, stop printing on my dot matrix so I can hear my call, please.
What else you got in the news this week?
I got one other one too. Sage. So we know Sage has a pretty big suite of software, including accounting side of things, also some HR stuff. They just had their grand opening for their new North American headquarters. Any idea where that is?
Hoboken, New Jersey.
Not New Jersey, but yes, to the East Coast-ish. Atlanta. So I think it's in the hot seat of Atlanta, which I feel like Atlanta is only going to get bigger just because of their, like, they have the biggest airport, and I feel like it's not like right at the coast, but a big enough city that they're a little safer and all that. But yeah, they just kicked that off this past week. It does look very like compound Google-ish, that it's all hip and it's got screens everywhere and ways to collaborate with their customers, because the article mentions that they're seeing that very much people want to be more in person and talking through their tax and other stuff. So cool. I'm not the hugest fan of Sage. I haven't used it a whole lot either. It's kind of a big expense out there that my clients don't need to get to that level. But the one thing I did like is they talked about like sustainability of the products used to build it, and also that they used Georgia sourced lumber to build the building and all of that. So I like it that if they're going to be there, like try to help the local community and all of that stuff.
Well done.
Yeah.
All right, Jeremy. Well, first up this week, we got a fun little game that I get to run you through called Bona Fide Business Trippers. Yes, so often many of our clients try to write off travel, and we're going to discuss what does qualify and what doesn't qualify as business travel. Now, I know you always want to look smart, so I love giving you a good 50-50 question to really pad your ego. Ready for this?
I think I'm ready. If you go back to were they all true and false last week? Like I went 9 for 10 on one of your tax games. Come on. I brutally assailed you in the fast figures with ridiculous hard questions.
You know, Jeremy, it's not that I care about you. It's that I want our listeners to feel successful. And since I know you're gonna berate me with obscure questions, I gotta throw some softballs in here.
All right. Sounds good.
All right, Jeremy. First up, you have a family business running a nonprofit accounting firm, and you have put your cousin, your sister, and your uncle as board members. Can you expense the travel to get everyone together in one location to talk about the trip or to talk about the business?
First of all, the nepotism assumption in here is pretty accurate with some people that have on staff. But I believe if you are doing something to do with board members and getting it together, I think that is an expense that you can deduct. Yeah.
Well done. And so this one's already controversial because I actually know friends that will not even touch the board meeting, travel with your family. And I get it because there are things you can do where you say like, hey, we're all going to Hawaii and we met for 1 hour to talk about it. No, you actually have to have a board meeting, discuss stuff, keep minutes, show that it was of substance and material under an audit. Like there is a necessity of a legitimate sized business to have advisors, people that are looking out for the best interests and actually discuss things. But you've really got to do the board meeting. You really need to cover your butt because there are too many people that try to take advantage of this and they phone it in that now an IRS agent is going to look at this hard and really, really nitpick. So you need to cover your bases with those details. Thoughts?
And as we talked about earlier, the IRS does have a criminal investigation unit, so I'm told. So yeah, I think so too. The part I struggle with this is that we talk about you need to surround yourself with smart people. And if those are the smart people that you have in your sphere, right, you would want their information on your board, regardless of whatever potential relationship complications there could have. So yeah, I mean, I think it'd be a lot like a retreat, right? Whereas like we have a scheduled agenda of things, all that travel we think call business travel. Is there plenty of shenanigans too? But the main focus is business related activities.
Well, speaking of which, question 2, you and 12 of your friends who all own bookkeeping or accounting firms decide that you're going to go to wine country to all get together and discuss your businesses amongst debauchery and jackbox games. In the eyes of the IRS, is your travel and lodging to go meet with these, dare I say, ne'er-do-wells, is it a legitimate business expense?
If we call it a mastermind, yes. Yeah.
We're going to give you the right answer there.
All right.
So, Jeremy, I mean, so here's the hard fine line, right? Because obviously conferences, those count.
Yep.
Workshops is in the IRS, the wording they use, conferences and workshops. And honestly, if you're traveling for work and you are working on your business, it is a mastermind, yes, you can expense it. Now, here's where everything gets a little bit goofy, because I think all these questions, you could always say it depends, which I am not going to let you out with that answer going
Dang.
forward. But if your business posts a loss every year and you have tons of travel, you can't, like, you are going to be under more scrutiny versus if your business posts a profit, but then you've reduced the income some. But if you're trying to take your income to the negative, writing off a lot of this, you're probably going to be under much higher scrutiny going forward.
Yeah, I could totally understand that.
Question 3, Jeremy. You have a prospective new client you are courting, and they happen to live in a very desirable location. Maybe it's Hawaii, maybe it's a coast of California. Again, maybe it's the aforementioned Hoboken, New Jersey. Jeremy, is travel to meet with this prospective client / customer a business expense?
I do believe it is.
You know,
Yeah.
I was hoping to lull you into a false sense of security, right? Like, there's been too many yes answers so far. You're not falling for it.
Yeah. No.
Yeah, if you can show legitimate and earnest work put in to meet with this person, yes, you can absolutely expense the trip as long as it in good faith. Now, again, the IRS is going to ask for proof, documentation, meetings, calendars, if they really want to put high scrutiny on it. But I love it.
Yeah.
Question 4.
Okay.
You looking to expense mileage and a hotel room for you, your wife, and kids when traveling to a conference?
I believe I'm going to go no. You would have to percentage just me of the cost.
So this is where it gets tricky, and you could argue either way, but
All right.
I am going to happily avoid a perfect game for you. But here's the distinction.
Yeah.
If it does not cost any more, if it was still cheaper to travel via car and you're taking mileage, it was cheaper than a plane ticket, you were going to drive anyway, you can expense all the mileage, even though you had a whole bunch of, dare I say, hitchhikers in your car.
Yeah.
Now, hotel room. A standard double queen, if that's all you got and you didn't buy something extravagant or lavish or beyond needs, and it's just you and the wife and kids, and it's the same amount you would have spent anyway, no, you can get away with it. Now, if you upgrade to a triple deluxe suite or rent out an entire house and it's deemed extravagant or non-ordinary, then yes, you would have to percentage it out. But if you got a nice little conference somewhere you want to go with the fam and it makes financial sense, all day, man.
Nice. All right. I got to change my travel plans.
All right. So next up, question.
Okay.
Next up, Jeremy. Next question. There we go. I can use words.
Yeah.
Flights for your spouse and kids to that same conference.
Not unless they're your employees.
Correct. Because in no way, shape, or form you had to purchase extra tickets for them. No, you can't write off their travel unless they're employees or legitimate board members, which, as much as I'd love to say my 4-year-old is on my board, he is not providing substantial merit to the company as a board member. So
is there a minimum age for a board member for a company? I would doubt it, but yeah.
That's a great question to ask your tax professional.
Yes.
All right, Jeremy, a few more. You are looking to gain some market share on your competitor, your part-time controller. You travel out to the city of their corporate headquarters to try and arrange a meeting and discuss with some of their employees, just scoping out the competition. Maybe you don't do it in that sense, but hoteliers like that I have in my industry, they travel out to one of their competitors' properties to stay.
Right.
Business expense or no?
I feel like that's shady. I want to say yes, but I'm going to go no.
So technically, according to the IRS, you can deduct expenses for checking out competitors. Now, I have never seen an audit, nor have I seen details on how this works, because again, an IRS auditor could put a lot of scrutiny around this, like, well, what did you do other than just walk around their building? And, oh, you stayed for 6 days and, you're expensing like going out to a steakhouse every night? No. But there is legitimate reasons where checking out competitors can be expensed if you can prove the business merit and that you were working the days you were there.
I feel like your clients would be easier to get away with this than anyone else, though. Like, hey, we just wanted to go check out this hotel, and as long as they're not extremely lavish in it, that would be pretty easy to defend. Whereas like us trying to look at our competition as other accountants, because I have one of our survey questions that goes out like, hey, we're well positioned against our competition. And what do you feel about that? And they're like, well, I don't know what the competition is or what they do. And like, we can do a little research on it, but you only can figure out so much, right? So I feel like that would be a harder sell and harder to gain any kind of insight on the competition than what other hotels may have.
Wholeheartedly agree. It's a little harder to do in our industry. All right, 2 more questions, Jeremy.
Okay.
You are looking to buy a piece of real estate in Salt Lake City, Utah, so that you have a reason to go visit your favorite podcast hosts. Is that trip business expense deductible?
First of all, why would you want to do that? I always joke with my team too. I got to get my little farmette with 10 acres on it, but it wouldn't be in Utah. I'm going to go no.
Well done. Well, and actually, this one you could have argued either way.
Okay.
Because if you're going to look at property, no, you can't expense it unless you can use Jeremy's favorite word, which you can show that you consummated that deal because of that trip and it was necessary in the process. Then you can go back and claim those expenses. But all the other trips you did to Denver, Colorado, and Dallas and wherever else to look at those properties, no, you can't deduct those, just the ones that are associated with the deal that closed.
I do enjoy consummating. So that's, I love it.
Last question, Jeremy.
Yeah.
Now you bought that property. Now you're on your way to check on that rental property in Salt Lake City, Utah, near your favorite podcast host. Business deductible or no?
Yes, because you have it, right? Yeah.
Yep. You're checking in on your investment. Again, time logs are your friend, showing what you did, when. You can't just say, hey, here's my flight. I checked on the property. No, they want time logs. They want proof of the merits, and all the rules about, what's a travel day, what's a business day, what's a personal day all apply. But yes, you can absolutely deduct it. Dude, I think you got like all but 2. Well done.
I think so too. Nice.
Hey team, this message is for our bookkeeping buddies out there. And I know when my firm offered only bookkeeping, it was super hard to find a tax preparer to partner with. Well, if that's you, look no further. Me and my team at Specialized Accounting are looking for bookkeepers to partner with. We will do the tax planning and preparation for your clients, and you keep doing the bookkeeping. No longer have fears of working with a tax preparer that doesn't know what they're doing, or live in fear of them stealing your clients. Me and my team, we want to continue to grow, and I want to continue to grow UnAccountable without growing the name that we steal clients. So we would love to partner with you. If you're interested in working with our team to do the taxes for your clients, reach out to hello@specializedat.com. That's Specialized Accounting and Tax, specializedat.com. See you soon.
And Jeremy, with that sound, it is already halftime, the part of the show where we head to the sidelines and have ourselves a nice little app snack. And today, I honestly have no clue what we're reviewing because my internet's slow, but you picked this one, so hit it off.
I know. I figured you picked enough of them. And even last week, we started talking about how to do better employee engagement.
Yes.
Right? With, oh God, I should know this. What was the name of the thing?
Kahoot or quizshow.io.
Yeah, right. So I kind of took the same token with this one and an app called Trivia, which is something that you can add into your Slack or Microsoft Teams to do some fun things and build camaraderie internally. So what this does, and there are different levels of it, is one, it can hook up with your kind of Gusto or your employee records, and it'll automatically call out people's birthdays and work anniversaries and all of that stuff, which is nice. Like, get people out there celebrating the things. Also can do like what we have it generate every day in our water cooler channel. It generates a question of the day, which is just a random thought-provoking thing where everybody can give their thoughts on it. Like, what I think today, like, what's your biggest pet peeve, right? And then there's discussion around like, I don't like chewing with my mouth open, or people who live in Utah, right? Like things out there that you just want to gripe about.
People who don't debrief all their fast figure questions.
Yes, people who skip questions. That's right. Another thing it does too is just like randomly we'll start like a game, whether it's like show photos and what movie is this from, or Hangman, or true or false, is this fact true? And then people can just take a few seconds out from their day and play the game and comment on each other's answers and things like that. So kind of a cool little tool that we add in just to get a little more interaction in our remote atmosphere.
And you said it was TryTrivia. What?
It is just called Trivia, but it's at TryTrivia.co, and you can get it for Teams and Slack. So, fun fact, we used this one, and then it got to be just a little bit repetitive, and it has a competitor out there called Ricotta. I think it's kind of like the cheese, but not really.
Yeah.
We've used that one, and it's been way worse, like way more repetition of things. So our year subscription of that is just going over now. So we're going to switch back to trivia because it was way better. And again, I really liked it. So if you look too at their plan, they do have a free one. There's not a lot there. You do get the games and things like that. But even their most popular one, where you get to do a little bit more of notifications and anniversaries and things like that, $1 per user per month. Super reasonable just to get some engagement.
Yeah, that's not bad. I dare I say though, I'm afraid of like we're in the middle of a client onboarding meeting and a game pops up and everyone's like, "Hold on, client, I want to be the first to get this one right." Like we put everything on hold because we're a darn competitive bunch.
Ooh, yeah. I mean, most of them are not. You can pick like it's happening now trivia, or like you need to go do it, and then there's a leaderboard. Right.
Got
and I think we had a couple of them like you need to do it now. And then people are like, well, I'm not even working now. I don't have a chance to do this. So we figured out that you can time it and do it at any time. So
good to know. All right.
Hopefully your employees have a little better discretion than that. It'd be like, oh, wait, trivia game. Please hold on, client. I got things to do.
Okay. I said my employees. I meant the owner of my company when I said that.
Yes. Yes, indeed.
All right.
Cool. So then let's get to another game. And I know how much you love all of the theory and tax law games. And man, is it very helpful for us to know that? But I want to talk a little bit about marketing and marketing your firms.
Okay.
Okay. So I went and I used our friend ChatGPT to bring up some questions around marketing your accounting firm. And I have a few of them just to talk through. And I have the answers it provided. And I'm calling this off the mark, that if you would agree with these answers or not, first of all, can you get them right? And then do we agree, or do we think that the AI generated questions here may be a little bit deceiving and there are potentially better options?
Not sure I understand where we're going, but hey, I'm ready to play.
All right, let's do this. First one, and they're either multiple choice or true or false. So I'm not even putting you through the ringer this time. It's fantastic. All right, number one, which social media platform is considered the most effective for B2B marketing in the accounting industry?
I'm going to go with LinkedIn.
I didn't even have to give you the options.
Hey, oh yeah, I forgot you were going to give me options. My bad.
No, all good. One of my pet peeves is not waiting for the options. But anyway, yes, LinkedIn. The other ones they were going to give was like Facebook, into Instagram, TikTok, or Snapchat. But business to business.
Yeah, B2B was the kicker there.
B2B was the kicker there. Yeah, and I would agree with that. First of all, do you use this? And then what is your favorite way of doing that in LinkedIn?
Okay, so yes, we're on LinkedIn. Yes, we get most of our engagements from our Friday dad jokes, which, I mean, sometimes my assistant writes better captions around the joke than the joke itself.
Right.
But no, I mean, we get engagement through that. And really, it's just being part of other people's worlds and getting speaking gigs. And then a conference tags you. And it's not that you get sales from it. Like, I have never gotten a sale by direct messaging someone and saying, hey, can we meet up? It's showing that I'm an authority in the space by showing up over and over. And then people, when they're finally ready to talk to someone, they're like, hey, I've known of you for a while. We've connected. Like, you're almost just showing that you're legit, right? It's like you're in the same party now and you can eye each other from across the room for a good hour before the client makes the move. Like that's almost what LinkedIn is to me. Yeah, Facebook, everything else, all the leads I've gotten there, mostly garbage, mostly people that are price shopping and want to find the cheapest deal.
Yep, well, I would agree with all of that. How many of those messages do you receive a week from people trying to give you like, hey, sorry for the blind introduction. I want to be your friend. And hey, have you thought this?
Oh, on LinkedIn?
Yeah, on LinkedIn.
Oh my gosh. Like probably 3 or 4, between someone wants to buy my firm, someone wants to connect, someone wants to, or they're a bookkeeper that wants me to outsource work to them, or I post a job and they're like, hey, do you have time to chat about it? I'm like, no, that's what an interview is for, and you have to apply for those. I am almost about to add to my job description, if you LinkedIn direct message me, it is an instant no. Yeah. Because no, that's not how this works.
Yeah, I agree. I get about the same frequency and amount of them in the same thing too, and it's like, oh god, we've never got a client from instant messaging anyone either, right? And I agree with you. I think some of our highest engaged posts are with when we take super financy and say like, where is she, and somebody like that region and where they are. So it's being there, it's being present 100%.
Can you imagine what it's like for those people that are actually like important in the accounting space, like not C- level accounting influencers like you and I, but actually like proper B level of influencers even?
Yeah, it's us that are knocking on the door like, please be friends with us, please. Love it. All right, number 2. What is the best way to turn website visitors into leads? Having a schedule time with us link with qualifying questions, offering a free resource like an ebook in exchange for their email, having your email address in big bold letters across the top of the page, or D, dad jokes.
Obviously D, but then again, your company's bigger than mine, so I'm doing something wrong. I'm going to go with a calendar, I'm going to guess.
So this one, it said the free resource. So I think the best way to turn it into a lead, I would disagree with that, is like that is the best way to get them on your list that you can market to them because you gave them something. But I would agree with you that like that scheduled time, if you have a really qualified and interesting lead, and I forget the 3 levels of the marketing funnel, right? It's like shopping and interested and then decision or whatever it is.
Yeah.
I feel like that link, that like schedule time with us, is going to actually get you more in the door, but the resources will get you to grow your list you can market to.
Yeah, because I mean, I guess that's what is the question. And I maybe have to go back and listen to what you said. You're right. Like if you're just trying them to do anything and interact, you're right. Maybe the free resource is more. I honestly don't care. I want you to book I want someone that's about ready to buy.
Yeah.
And people that are about ready to buy, they know they need an accountant. They know they need a bookkeeper. They're just looking to get it done. And so what do they want? They don't want a free resource. They don't want to email and wait to hear back. They want to get time on the calendar next Tuesday.
Right. Yep. Totally agree. All right. Let's move on to number 3. Which of the following is the most crucial for a small accounting firm to establish in its marketing effort? Published in competitive pricing, unique value proposition, niching, or employees with the expected credentials?
Ooh, what are the expected credentials? Do you know I have DARE after my name? I passed drug and alcohol resistance education in the 5th grade, so.
Drugs. Some of the big kids do them.
You signed the I Will Stay Clean Act?
Yep. Yeah, so I'm going to put that after my name. Yeah. I'm going to go with niching.
So this one, it said unique value proposition.
Yeah, that was going to be my next guess.
I think you could go either way with this one too, right? Is that
dare I argue they're kind of similar? Like, what is your unique value? I know this industry.
Right. I would agree with that. And I think they could be equally important, right? If we talked previously too, niching doesn't have to be an industry. It can be a type of people. It can be your area or whatever it is, right? But getting down and knowing where your people are and finding them. So I think that is uber helpful. And then the unique value proposition is, yes, I do this thing, but I think you need to go deeper than that too. Like, I do this for this industry and can do this very well. Like, hey, we can do your restricted funding super well and track that. And you have reports at the touch of a button whenever you need them, things like that. So I think those both are pretty important.
Yeah, I think one is the other. Like, niching is a unique value proposition.
Yeah.
Great. Fair enough.
All right. A couple more. We're getting some true and false. Hosting free webinars or workshops can be an effective way to attract new clients.
I mean, it sounds good. Unless I do it, then people just block me proactively. It's like they go to LinkedIn to find me to block me, but I'm still going to go with true.
True. Yes. I would agree with this, but I also think those are like, you need to engage with this with somebody that has already a following. I think those for you just trying to do it for your firm, if you do not already have a big community, is hard.
Yep. Right? Oh, wholeheartedly agree.
Yeah.
And I will say too, like, I've done webinars for Relay, for Keeper, for whatever else. All that does is get us extra podcast listeners. It does nothing for my accounting firm. I get clients from speaking for the lodging associations and for the restaurant associations, and I speak at those ones, and then I get people following up. And so it's, again, speaking to your niche. People don't speak for accounting stuff unless you want to grow yourself as an accounting influencer, which, by the way, accounting influencer, well, actually, I was about to say it's not all it's cracked up to be, but we wouldn't know. We're not one.
Not yet. No, I agree with all of that. All right, let's jump to number 4. The best way to get referrals is for happy clients to tell their friends.
I mean, how else do you get referrals? Yeah.
I'm going to go, I changed the wording of this one a little bit. I'm going to
Okay.
go. So the answer they gave is, well, while happy clients may refer you naturally, actively asking them for the referrals and offering incentives like a bonus or something can boost the number of referrals that you'll get. The question was originally, what is the best way to get referrals is to wait for happy clients to tell their friends. But then I thought it was too easy. Right?
It is too easy.
There's no way.
But if you're saying happy versus provide them a financial incentive, happy people refer more than the financial incentive, in my opinion. And honestly, people, the one thing I find interesting is like I find other vendors at these conferences and I tell them we got kickbacks and like, I don't care about the kickback. I want to know if I refer my clients to you, you're going to make me look good because I referred you. They care more about their reputation than they do any sort of financial kickback.
Yeah, I'll agree with that. I think it goes hand in hand, right? Like you have to have the happy ones, but also making it apparent that you're asking for them and like, hey, we're growing. If you know people, whatever that is, that prompting can also help there as well.
Yeah.
All right. One more. Blogging about tax tips and financial advice can help an accounting firm attract more website traffic.
I mean, I'm going to go with yes, because it can't hurt, but does it really help?
Well, so this gets into the thing where we're looking at this a little bit now is your SEO, right? Search engine optimization and having all the things out there and having content is one of them that can help you get on keywords in all the right places. Just met with a gentleman, uber smart, that said, hey, I looked at your site. You're doing almost everything wrong. And I'm like, that's exactly where I start with all the things. So that's perfect. So yeah, having content's helpful, but it's got to be structured to know where the Googles and the other things will be able to search it, find it, bring it up, put you high on the results list.
Yeah.
Are you doing any of that stuff?
Yeah, we have our blogs. I mean, unfortunately, when we had our marketing gal and my assistant, they take Loom videos from me. I go for walks and just record, okay, here's what we could do about this. Here's what we could do about that. They throw it into AI. It comes out with something. They proofread it and send it out as our blogs or our posts or our speaking submissions. And we do that all the time. And it is helpful.
Yeah. The other thing that I didn't know about is like having the keywords you're looking for on everything. So like, even if you are uploading an image, make sure that image file name has your keyword in it. And when you're doing a blog, have an FAQ at the bottom with your keywords in it and things like that, like how important that can be to your results. So that's stuff that I'm learning now that I would never know. And I honestly don't expect my marketing manager to know either. Like you just got to be a professional in that field. So yeah, interesting stuff.
Love it. How'd I do?
I have no idea. I think you got 50 to 60% of them right. Perfect.
There we go.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
All right, Jeremy. Well, let's not pretend I ran away from the computer at all to fill my coffee, hoping Ben Stein took longer to talk.
I was going to say the game starts when Tyler gets back to the rocking chair.
That's why I wear a headset, because now you can fill your the rocking chair. I forgot that was probably just sitting here lonely while I walked away, huh?
Yeah, it was depressing.
All right, Jeremy. Let's put 1 minute on the clock. Actually, real quick, I want to tease up this round.
Okay.
Jeremy, as we get into this one, I know historically, questions where we say, what year did what happen, are brutal. Yes. Brutal to answer, especially if you don't give a window. But I am giving you 10 questions. All the answers are years to the exact. And dare I argue?
Oh, God.
Every question here, I could get right. You could get a perfect game here because I know I could get these all right.
How do I test that? You're just mad because I waited hard on you. No, that's perfect. Let's do it.
Bring it on. Here we go.
Yep.
According to Britannica.org, what is the first year millennials were born within a 2-year window?
1999.
According to the 2004 hit song by Bowling for Soup, Debbie is stuck reliving her glory days in what year?
1985.
In order to file a Form 1040 SR this year, the 2024 tax year, a taxpayer need have been born by 12/31 of what year? 1040 SR, 1040 senior. What year did they have to be born?
1960.
When the lone traveler checked into the Hotel California in the Eagles' classic song, finish this lyric, so I called it the captain, please bring me my wine. He said, we haven't had that spirit here since
1969. 60? 50? I think 60. Hey, go
This is the year that the Tax Cuts and Jobs Act went into effect.
2012.
Prince is going to party tonight like it's which year?
1999.
If I invest $100 today in the market, and the market continues to grow at 10% per year as it has for nearly the last 30 years, in what year will my money double its initial $100 investment?
Ooh, compound interest calculations, beautiful mind calculations working. It's 2040.
Bryan Adams got his first real 6-string guitar this year.
69. 1969.
When Jeremy and Katie have a surprise baby this year, what is the last tax year they could claim that child as a dependent if that child doesn't go to college?
You bite your tongue, you bastard. What would it be? 35, 90, or 2039.
The Four Seasons sang about this night that they met a girl and they don't even know her name. It was late December in what year?
Back in 53? 53. Huh? Yeah, 53.
Well done, sir.
Ooh.
Dare I argue that wasn't the meanest question about years?
No, it was not the meanest. It could have got way worse than that. There was, yeah. I feel like you say you could have got all those right, but in the hot seat doing it, you probably would not have.
No, in the hot seat, I absolutely wouldn't have, but it doesn't change the fact that I made them all within swinging distance.
Yes, I agree. It was fair. Unlike mine last week, this one was fair.
All right, Jeremy, let's debrief. And first off, according to Britannica.org, what is the first year millennials were being born within 2 years? You said 1999. You know that you and I are millennials, right?
I am like on the verge of that and Y, Generation Y.
Yeah. So
that was way off. Yeah.
1999 is not right. You know, some sources say 80, 81. Britannica says 81. Others, I was giving you 2 years either way. But I bring this up because Credit Karma, you know, I talked earlier about that article I was hunting for. They also had one other article talking about how roughly 49% of taxpayers surveyed are more dependent on their tax refund to make ends meet this year than they have in the past, rising to a total of 57% of millennials say they are somewhat dependent on their tax refund to make ends meet. Now, do you think this is polling bias because it's people that are on Credit Karma are answering? Do you feel like this is a fair representation of our demographic?
I didn't think about that. So if you think like if you're on Credit Karma, you're maybe more worried about your credit scores and needing to borrow money. And
do you think the ultra wealthy are on Credit Karma?
No, probably not.
Right? So,
that could be. I was originally thinking like this would be people who are not very well financially educated because, as you and I know, like I would love to get $1 back from the IRS just so I don't have to pay anything and I have that money to invest the whole year. That's an interesting point. And maybe I don't know.
Yeah. I will say, maybe I won't say because I lost my note. Oh, well. Coming back in. Yeah, Jeremy, you and I not on Credit Karma because we're on Monarch just watching our net worth drop every day. I've stopped looking at that app since we recommend it.
That was good to follow your own advice there. But did you I saw it probably not this past week, so I think it went down a little bit. But prior to that, it had gone up, way up, right? But it was still at the exact same after the drop, pretty much where it was before Trump got elected.
Yeah.
So you saw all the gains, and then that's why you got to look at the big picture, man. I was just so that whole blip didn't mean anything for me. And I probably could have been better off if it went down and then back up because I'm continually buying, and I would have bought at a lower point. So, yeah.
That's where I tell my staff they should be happy I was late on getting bonuses out, because it wasn't late February. It was mid-March when the market was lower and those 401k contributions paid off more.
Yeah.
So go team go.
Yeah.
Next question, Jeremy. According to the 2004 hit song by Bowling for Soup, Debbie is stuck in what year reliving her glory days? You correctly said 1985. No other merit than Ian. You get some fun music drops on this episode.
Yeah, I love this.
Question 3, in order to file a Form 1040 SR this year, 1040 Senior, for the 2024 tax year, a taxpayer need have been born before 12/31 of what year? You said 1960, and while technically that's wrong, I mean, I'm going to argue maybe you could have said like 2025 tax year, and maybe it wasn't clear enough. I'm going to give you a sympathy point because it's 1959, 65 years before 2024. I don't know if you know this, because I wasn't even really looking out for the 1040 SR, but it always surprised me when I do my parents' tax returns. And I looked up the reasoning for the 1040 SR. Do you know why the IRS has this?
No, and can I just say that I was pretty proud that I got that. I was like, it's got to be 65, right? Because all the other things are 65. But no, I do not know why this is there.
So the benefits include it uses a larger font with a more readable layout. It includes a standard deduction chart directly on the form, and it's suitable for various income sources, including wages, salaries, pensions, and Social Security benefits. I know my mom probably is listening to this episode and cursing me for calling out she needs the bigger font on the form.
But like you don't have to use that form, right? You can use the regular one for, okay.
But my tax software automatically generates it the moment they go over 65.
That's funny. I was looking at hotel rooms the other day, and my 14-year-old was there with me, and he's like, Dad, there's a AARP rate out here. Why don't you pick that one? And I was like, I can't pick that one yet, thankfully. But good call.
Next question. When the lone traveler checked into the Hotel California in the Eagles classic song, finished the lyrics, so I called up the captain, please bring me my wine.
We haven't had that spirit here since 1969.
Well done. I just want some fun audio clips. Thank you, Ian.
I think I think I got one of these wrong, but like the 10th place, right? Like the rhyming one I always get right, but is it 59? Is it 69? Is it 70?
Yeah. This is the year the Tax Cuts and Jobs Act went into effect. You, clearly not doing taxes, said 2012. The answer technically is 2018. The legislation was introduced in 17 and then didn't affect until January 1st of 2018. Mainly the reason I want to bring this up is like that's when bonus depreciation came into place and standard deduction increased. And a lot of that stuff is phasing out over the next few years. Jeremy, I mean, purely speculation on your part, but do you believe we're having big tax changes coming back with our current presidency? Do you think it's just going to die off and they can't get something else through? What do you think's coming?
Well, this was like my bad math because I knew it was in the first Trump term. And I was like, when was that? And I clearly did not do that right under the radar. I think they will, if I had to guess, I think they will extend the current one. But I also think there are big tax changes, right? So I don't think they're going to let this one die. But I feel like nothing right now is safe from any changes. There's going to be a ton, whatever that may be. And who knows which way, right? They talk about big giving like a lot more tax breaks to companies and the more wealthy people. I could see that happening. I don't know.
I would bet on anything is change, and change means that you can be a guide and an advisor as long as you stay up on it. Whether or not you like all these changes, I do think it does lead a little bit to blue ocean if you can stay up on it.
It'll be a good blog fodder for you so you can keep your SEO going.
Ooh. You know what? We should start a content company called Blog Fodder. I like that. I am the Blog Fodder.
Well, what was the next iteration of our podcast going to be again? You told me this to call
reasonably competent or something like that. I don't know what you said in our message, but it was wonderful.
Yes.
Next question, Jeremy. Prince is going to party tonight like it's what year?
1999.
Well done, sir.
Yep.
Again, no accounting merit. If I invest $100 today in the market and the market continues to grow at 10% a year as it had for the last 30 years, in what year will the money hit double its initial investment, hitting $200? You said 2040. Not even close. 2032, sir.
Ooh, okay.
So, and this is why I bring up, do you remember the rule of 72?
Is this the one where you subtract 72 from your age and that's the percent? No.
No, are you thinking like that little card game we did as kids where you predicted your future just by the little paper
Yes.
triangles?
Yes.
Yeah,
Yep.
yeah. No, the rule of 72 states that if you take an interest rate, and so let's say 10%, and you divide 72 by that rate, that's how long it will take for your money to double. The math is super complex as to why it works, but it relatively works out every time. So if you have something invested at 8%, 8 goes into 72 9 times, it will take 9 years for your money to double. At 10%, it'll take 7.2 years. So you can do this math on, and it's a good way to kind of do the math of like, hey, should I pay off my mortgage? Should I invest in the market? How long will it take my money to double? For those of you that don't know, the rule of 72, it relatively works out every time. Look at your rates, divide it into 72. That's how many years it'll take to double your money. Fun fact.
That is fun. Yeah. And easy, like even for people who don't like math, that's pretty easy.
Question, I don't know, but we're moving on to the next one. Brian Adams got his first real 6-string this year. You are correct. It was the summer of 69. Gosh, I'm going to have that one stuck in my head amongst all these songs.
Yeah.
Those were the best days of my life, man.
Yeah, that is probably the one that's going to stick with me too.
When Jeremy and Katie have a surprise baby this year, what is the last tax year they could claim that child as a dependent if they don't go to college? If there was a question here that I would just betting beyond belief you would not get right because the question alone would throw you so off your game that you were just like, I didn't even hear the rest of the question. You just had a panic attack. Yeah. This was the one. You said 2039. I'm sorry. It's 2043. It's when that kid turns 18 years old. Well, actually, they'll be a dependent through 18. So 18 more years, 2043. There you go. And then if they go to college.
I was trying to get to 18 years too and just did bad math in my head because I was sweating
at the thought of another kid.
Also, I need a refund for a procedure if this is going to happen because that.
Yeah. Do you get a discount on the second one?
I'd hope so. God.
Jeremy has the ever elusive double vasectomy. All right. Last up. The Four Seasons sang about a night that they met a gal and they didn't even know her name back in late December of what year? You said 1953. You're right. The tens place got you. It was 63.
63. All these things happened in the 60s, man.
What a lady, what a night, man.
Love it.
All right. And let's see. And with that, you got 1, 2, 3, 4, 5 out of 10. Dare I say you only got them? No, you got one accounting one and got one music one wrong. So well done, sir.
Keep the music one coming. All right. And then we are at our winner of the week. And the winner of the week, I'm going to go with independent, larger accounting firms. I don't know if you saw this article in Accounting Today, but more or less saying accounting firms can declare their independence and remain that way and not subvert to the private equity trend that all these other firms are going to. Just some of the highlights of this, saying that they feel like they're staying better connected to their clients, they're being a better steward for their employees. Some other firms that said how they can continue to do this, they have a required retirement age at 65, so partners can't hang around forever and they keep new blood coming in. So yeah, hopefully, despite those 1,000 LinkedIn messages we get to, hey, buy my firm, or we want to buy your firm, you can stay independent and still be successful.
And for our loser of the week?
Loser of the week, I feel like I'm a broken record on this one, but you see this article, Tesla has $4.9 billion of fixed assets that are missing from their books. No, I take that wrong. They reported $6.3 billion, but they can only substantiate or find $4.9 billion of that. So there's $1.4 billion that is missing from what they said they spent in CapEx to what they have on their balance sheet as PP&E, or plant property and equipment. And like, I guess you could say that, sometimes you buy things and they're not the right value, or you have to discount them right away based on market things. But $1.4 billion? I don't know.
Yeah, I'm sorry, that just screams someone's like, capitalize everything. We got to make that P&L
Right.
look good. Capitalize everything.
Yeah.
Throw it to the balance sheet. We don't. I've got a client like that where it's like, we capitalize everything because they are doing a rebuild and it's like 4 years in, and they're just like, everything's part of that expansion project. And so it's just all sitting on the balance sheet, millions. And it's like, well, you're saying it's part of the expansion. Okay.
Yeah. We can't argue it if it can be reasonably tied to it. Yeah. So interesting accounting there with the Elons. Oof.
Now, Jeremy, we got 1 5-star review this week, but it was from my mom in a text saying you guys did great. So
Thanks, Mom.
yeah, people, we need some help on Podchaser or Apple. Come on.
Yeah. Come on. Help a brother out.
Jeremy, until next time, hope you survive it. And I think this is the last episode that comes out before tax season. Like, we'll get our lives back. Well, at least I will. You've had your life back for a month.
Yeah. And that'll be exciting. We should celebrate.
I can't wait, sir. Until next time.
Hey Tyler, my staff has asked me to get better knowledge and training in spreadsheets and Excel. Any ideas?
Well, yeah, dude, I'm a little offended. You go to tylerauto.com, we have a course on intermediate Excel formulas. Just have them go over there and use the promo code UnAccountable for 50% off.
Nice. Gonna do that. Thank you, sir.